Good morning, I'm Andy Hodges and you're watching The Mint. Let's have a quick look at last Friday's closing prices on the Zimbabwe Stock Exchange. Also African currencies, agricultural commodities, metal and energy prices. In our main story this morning, to parody a famous song, where has all the mealie meal gone? Mealie meal is a staple diet of all Zimbabweans. It is the main ingredient in what Zimbabweans call sadza, in Tanzania it's called ugali, in Zambia nsima, South Africa pap, and Nigeria fufu. In December last year, the retail price of mealie meal rose by over 50%, as millers cited the increased costs of imports and production, and after government stopped subsidizing grain to millers, who then passed on the cost to consumers, a justification for the price increase. Retail prices of a 10 kg bag of roller meal was selling for between $95 and $120. Any increase in the price of mealie meal affects literally every single person in Zimbabwe, man, woman, and child. The government of Zimbabwe immediately responded by slashing the price of mealie meal by 50% with the introduction of a new subsidy model for the production of roller meal. Prices, however, of super refined mealie meal did not reduce as the subsidy did not apply. The government hoped that with the introduction of the subsidy, mealie meal prices would reduce to around $50 for a 10 kg bag. The problem is that this subsidized roller meal is just not available in shops at the price of $50. And the question is why? Well, subsidized roller meal is being diverted to the black market by buyers who grab consignments as they reach the shop's shelves. The buyers then offload the roller meal to informal traders who often repack it into smaller bags, with these two sets of middlemen more than doubling the $50 price of the original 10 kg bag. The middlemen take it to the parallel market and sell the full 10 kg packets or repackage it into anything from 500 grams, popularly known as saona, emergency, to 5 kgs. In addition, black market informal traders demand cash only, which many who need mealie meal have to get the cash from another set of informal traders, mobile money vendors, who take a premium of between 25 and 35%. Of course, the ripple effect. Well, some people were or are panic buying the roller meal in the face of shortages. The Mint spoke to an owner and manager of two different canteens in the capital, Harare.
We go direct. We used to go to one other company. They don't have to say by name. Yes, we're getting it from there direct, but these days we're having a challenge. Sometimes they have it, sometimes they don't have it.
Government has said that the availability of subsidized maize meal is expected to improve following the establishment of a task force to ensure transparent and equitable distribution of the product. The task force will make follow-ups with retailers to curb diversion of the maize meal to the black market. The Grain Millers Association of Zimbabwe says it has acquired 100,000 tons of maize from South Africa and Brazil, with the first consignment of the staple starting to trickle into the country this week. Certain sections of the Zimbabwean population appear now to put the pursuit of making money above all else. The worry is, task force or not, grain imports or not, the law of making a quick buck may be too strong for some, and while some make rain, the rest of the nation suffers. Business Insider reports that the spread of the deadly Wuhan virus or coronavirus from its country of origin, China, to other countries in Asia and the United States has raised fears that the virus could lead to a global pandemic, causing stock prices around the world to fall last week. So how can the virus impact the global economy as a whole? Let's look at some. The SARS virus in 2003. The outbreak of severe acute respiratory syndrome, referred to as SARS, in 2003 was one of the biggest outbreaks in recent history. Originating in southern China, SARS reached 26 countries and infected more than 8,000 people, according to the World Health Organization and the Centers for Disease Control and Prevention. 774 of those cases resulted in death. Various studies and models estimated the economic damages around the world caused by SARS were between 40 and 80 billion US dollars. SARS impacted the economy by influencing expenses like medical care, travel, consumer confidence and investment, according to a report funded by the National Institute of Health. Look at the Ebola virus. From 2014 to 2016, the Ebola virus spread from West Africa, causing nearly 29,000 cases and 11,316 deaths in West Africa alone. Outside the region, around 2,500 were affected and 1,597 died, according to the CDC. Ebola severely impacted Guinea, Liberia and Sierra Leone, causing an estimated $2.2 billion in GDP loss in the region. The United States, United Kingdom and Germany donated over $3.6 billion to help respond to the outbreak. Assessing what the impact of an extreme outbreak, a pandemic of an influenza deaths would be, a 2018 study estimated that a pandemic that kills 720,000 people will cost the global economy around $500 billion per year of the outbreak. A global outbreak would hurt poorer countries the most, the study said, causing a loss of 0.3% in annual income for high-income countries, but a more significant loss of 1.6% in lower to middle-income countries. The Wuhan virus, like previous outbreaks, has impacted various industries from travel to healthcare. Stock prices in the travel, retail and luxury goods market fell under fears that an outbreak would decrease demand. The virus has also impacted airline stock prices, with United Airlines and Delta Airlines falling 2.5% and American Airlines falling 4.2%, CNBC reported. But the virus has bumped pharmaceutical stocks, with pharma stocks in China rising by 10% earlier in the week. The government of Zimbabwe will only renew mining licenses to companies that produce receipts to show that they remit royalties to local municipalities, a top official has said, responding to requests by local chiefs to ring-fence local community interests by ensuring that mining companies contribute to local development. Minister of Local Government, Public Works and National Housing, July Moyo, said the government was willing to enforce compliance through licensing procedures. Moyo said government, through the Ministry of Mines, has made an undertaking to ensure that only miners that pay royalties to local authorities will have their licenses renewed. He further said that the government expected that these monies are channeled to communities for development purposes. Center for Research and Development Director James Mufumi, however, said, "We have made recommendations that local authorities must have powers to collect revenue, and those powers must be enshrined in the amendment of the Mines and Minerals Act." The National Council of Chiefs has blamed the chaotic situation in the artisanal mining sector on some officials in the Ministry of Mines and Mining Development, who corruptly facilitate the haphazard issuance of mining permits to prospectors, even in villages. Illegal miners have mushroomed everywhere in search of gold. The development has not only caused serious land degradation, but has also resulted in battles for ownership of gold claims. Chief Charumbira said it was wrong to brand the artisanal miners illegal elements. It is clear that artisanal mining in Zimbabwe is being carried out without apparent planning or thought. The environmental degradation to the countryside, as well as the poisoning of land through toxic spillage, cannot be ignored anymore. Sanity needs to return to the artisanal sector. No one can blame these miners for trying to make a living, but it has to be done in an orderly, sustainable and controlled manner. Don Roberts, chairman of the London Stock Exchange Group, welcomed the president of the African Development Bank, Akinwumi Adesina, to open markets for trading at the London Stock Exchange on Wednesday, the 22nd of January. The reception in London followed the African Development Bank's Africa Investment Forum held in November last year. The innovative marketplace for accelerating investment into the continent is playing a valuable role in convening investors and corporates and removing the bottlenecks to investment and enabling a free flow of long-term capital. The 2019 edition of the forum, held in Johannesburg, South Africa, saw investor interest secures in deals valued at $40.1 billion. Mozambique featured strongly in the 2019 edition, with state oil and fuel company Expressa Nacional de Hidrocarbonetos tabling the largest deal worth $24.6 billion. Wrapping up a 3-day visit to the United Kingdom, during which he attended the first UK-Africa Investment Summit, Bank President Akiwumi Adesina lauded the prospects of continued collaboration with the London Stock Exchange Group. Looking ahead, the bank chief said it will be working with LSG's Africa Advisory Group, LLAG, to attract a bigger share of the $5 trillion global exchange-traded fund assets under management into African capital markets. The bank on Tuesday became a formal member of LAAG, an advocacy group which serves as a platform to enhance the development of African capital markets, boost trade and investment flows between the UK and Africa. At the recently concluded UK-Africa Investment Summit, £6.5 billion of commercial deals were announced, with many more in the pipeline. 112 African companies are listed on the London Stock Exchange, with a market capitalisation of £125 billion. In 2019, 2 African telecommunications companies raised £800 million in capital through IPOs in London. The African Export-Import Bank, or Afreximbank, announced that existing shareholders, including the Federal Republic of Nigeria and the Arab Bank for Economic Development in Africa, have invested $200 million to Class A, B and C shares and $300 million in callable capital, bringing the total value of new shares issued by the bank in 2019 to $500 million. The majority of the proceeds of the capital raised was used by the bank to retire warrants that were issued in December 2018. The new equity also puts the bank in a strong position to continue its growth in line with its strategic plan, particularly in the wake of the recently launched African Continental Free Trade Area, the largest free trade area created worldwide since the formation of the World Trade Organization. The bank continues to monitor market conditions to find the appropriate window to relaunch its initial public offering IPO in London. Professor Benedict Orama, president of Afreximbank, said, "The equity injection reflects the confidence which our existing shareholders have in the bank, and the bank welcomed their decision to rapidly take up additional equity." The African Export-Import Bank, Afreximbank, is the foremost Pan-African multilateral financial institution devoted to financing and promoting intra- and extra-African trade. The bank was established in October 1993 by African governments, African private and institutional investors, and non-African investors. Since 1994, it has approved more than $67 billion in credit facilities for African businesses, including $7.2 billion in 2018. Afreximbank has total assets of $13.4 billion as of 31 December 2018. The bank is headquartered in Cairo, Egypt. The New Times reports that Rwanda and Zimbabwe are set for further economic and trade cooperation, with the two countries set to hold a trade and investment conference from March the 24th to 26th in Kigali. The Trade and Investment Conference, to be held at the Kigali Serena Hotel, is being spearheaded by Rwanda Development Board and Zimbabwe's export promotion agency Xtra. Xtra Chief Executive Alan Majuru said trade with Rwanda had been on a small scale, and the upcoming groundbreaking conference will open new opportunities for Rwanda and Zimbabwe. Majuru said a memorandum of understanding between the two countries to create market access will be signed at the Trade and Investment Conference in Kigali. Trade volume between Zimbabwe and Rwanda peaked at $156,000 in 2018, from $6,000 in 2011. Zimbabwe exports to Rwanda increased to $90,000 only in 2014, from $6,000 in 2011, but it plunged to $4,000 in 2018. During the same period, Zimbabwe's imports from Rwanda increased from a paltry $1,000 in 2013 to $18,000 in 2015 and to $152,000 in 2018. With the Trade and Investment Conference on the horizon, Zimbabwe businesses have now started looking at the possibilities of exporting products into the Rwandan market. Rwanda's ambassador to Zimbabwe, James Musoni, said the two countries are making history together, since this is the first time that Zimbabwe and Rwanda have taken bilateral relations to another level. He said Rwanda provides opportunities for investment, particularly in sectors such as infrastructure, agriculture, energy, tourism, ICT, real estate and construction. Zimbabwean companies needed to exploit the daily flight schedule of Rwanda Air for trade purposes, he said. He said Rwanda has over the years experienced sustained high economic growth of over 8% average year-on-year real gross domestic product growth rate since 2007, making it the fastest growing economy in Africa. Confederation of Zimbabwe Industries Chief Sekai Kuvarika said this was an opportunity for the private sector to establish trade and investment opportunities. I'm Andy Hodges, and you've been watching The Mint. Please follow us on our Facebook page, Zim Papers TV Network, our website, ztn.co.zw, and on YouTube under ZTN. Your comments are welcome via our Twitter handle at ZTN News, and of course via Facebook. Join us here on The Mint every weekday morning at 6 a.m. Central African Time. Well, that's it from me this morning. Goodbye. Have a profitable business week, and you will be safe.